Ever wondered why some people seem to make a fortune in the stock market while others struggle to break even? The stock market, a world teeming with numbers and charts, is often an enigma to many. It's a universe where fortunes are made and lost in the blink of an eye. But why is it that some people seem to have cracked the code, while others are left scratching their heads? It's important to understand that the stock market isn't a game of luck. It's a complex system, a financial labyrinth that requires knowledge, strategy, and a certain level of audacity. It's like a giant jigsaw puzzle that's constantly changing. Each piece represents a different company, industry, or economic factor. And understanding how these pieces fit together can be the difference between making a fortune and losing your shirt. So, ready to decode the stock market secrets? Buckle up, it's going to be an exciting journey. In simple terms, a stock market is a place where people buy and sell shares of publicly traded companies. Picture it as a grand marketplace, bustling with activity, where ownership of businesses changes hands every second. The primary purpose of the stock market is to bring together those who wish to sell and those who wish to buy, facilitating trade with ease and transparency. It's the economic engine that drives growth, enabling companies to raise capital for expansion and innovation. Now, let's unravel how it works. It's all about supply and demand, the fundamental principle of economics. When more people want to buy a stock than sell it, the price goes up. Conversely, when more people want to sell a stock than buy it, the price falls. This dynamic equilibrium keeps the market vibrant and ever-changing. Now that you know the basics, let's dive deeper into the fascinating world of stock trading. Buying low and selling high sounds simple, right? But there's much more to successful stock trading. It's an art, a delicate dance of strategy, research, and emotional control. The strategies used in stock trading are as varied as the traders themselves. Some prefer the slow, steady pace of long-term investing. They research companies thoroughly, invest in those they believe will grow over years, and patiently wait for their investments to yield returns. They're like gardeners, nurturing their seeds and waiting for them to grow into sturdy trees. On the other end of the spectrum, we have day traders. They're the sprinters of the stock trading world, buying and selling stocks within a single trading day. It's a high-energy, high-risk strategy that requires a keen eye for market trends and a steady nerve to navigate the fast-paced world of stock trading. But no matter the strategy, there are three pillars that hold the art of stock trading together: research, risk management, and emotional control. Research is the foundation, the tool we use to understand the market and make informed decisions. Risk management is our safety net, the practices we put in place to protect our investments from major losses. And emotional control? That's the glue that holds it all together. It keeps us from making impulsive decisions based on fear or greed. Remember, successful stock trading is not about making quick money. It's about making informed decisions and managing risks. It's about mastering the art of stock trading. So, what's the secret to making money in the stock market? The answer may not be as elusive as you think. It's not about timing the market or betting on the next big thing. Rather, it's about having a clear plan, maintaining patience, and keeping emotions in check. Imagine the stock market as a vast ocean. Just as a ship needs a well-charted course to navigate the waters, an investor needs a clear plan to guide their investments. This plan should include your financial goals, risk tolerance, and investment time frame. It forms the foundation of your investment decisions. But a plan alone is not enough. You also need patience. The stock market is unpredictable in the short term, but over the long term, it has historically trended upwards. So don't rush, don't panic, and don't let the fear of missing out drive your decisions. In the same vein, it's essential to keep emotions at bay. Investing should never be driven by greed or fear. Instead, base your decisions on sound research and logical reasoning. Moreover, the stock market is an ever-evolving entity. To stay ahead, you must be a lifelong learner. Keep yourself updated with market trends, economic indicators, and the performance of your chosen investments. In the end, remember this: the stock market is not a get-rich-quick scheme. It's a platform for disciplined investors to grow their wealth over time. So, stay patient, stay informed, and stay disciplined.